This is about practical tips for buying insurance. Today's topic is on property insurance. This is the first of a series on property insurance. The topic is how to detail the subject matter to be insured when you take a policy. In property insurance, the detailing of items is very important. The insurance company accepts your proposal on the principle of utmost good faith, and it does not get into any verification of your assets or inventories proposed for insurance. It is only at the time of a claim that the subject matter insured is checked and verified against the records maintained by the insured. Oftentimes, the insured is unable to produce proof that the items lost or damaged are covered under the policy. There is no documentary evidence to show that the item was owned and available at the insured premises when the insured peril operated. Therefore, the insured is unable to get the claim for the affected item from the insurance company. I would like to give a few tips to avoid this kind of a situation. The main document a loss adjuster appointed by the insurance company at the time of claim relies upon, particularly in respect of commercial occupancies like shops, establishments, institutions, factories, etc., is the assets and the stocks or inventory registers. Business organizations are required to maintain a fixed asset register or FAR as per both Companies Act as well as the Income Tax Act. So it is important to have the policy correctly aligned with the FAR at the time of taking the policy. The FAR should be correctly maintained, preferably in electronic form with a backup, so that the same does not get lost in a fire or flood at the premises. In many claims that I have handled, the asset register in physical form got burnt in the fire or got washed away in the floods, making the loss adjustment difficult. The insurance policy may have definition of property or rather the designation of property clause, which helps avoid confusion or mismatch between the description of assets in the FAR and the policy. However, it is better not to overly rely on this clause and instead avoid mismatches to the extent possible. It helps to have a proper working paper that details how the FAR items have been converted into the schedule of the property for insurance purposes. As and when new items are acquired or capitalized in the books, the same should be endorsed onto the policy. Policies may have omission to insure clause, which protects against the inadvertent errors or omissions in declaring the assets. But however, one must note that this clause is not meant to protect against deliberate omissions, but innocent ones. Further, the omission to insure clause protects against additions or alterations during the currency of the policy, not something which was already missed out at the time of taking the policy. So these are some of the critical points to be kept in mind, but certainly these are not the only ones. Like every other insurance purchase, one must carefully read and understand the terms and conditions, particularly if there are any special conditions or warranties that are to be complied with by the insurer. Thank you.